Hello and welcome. I'm Patrick Curtis, Chief Monkey of Wall Street Oasis, and this is Monkey to Millions, a show where you get a front row seat as I mentor young students and professionals to try and help them break into their dream jobs. In the first cohort, you'll meet 4 students, all preparing for intense job interviews while trying to also balance a personal life and schoolwork. The goal of this show is to shine a light on the struggles of trying to break into competitive positions with a non traditional background and to give you a roadmap for your own success. My hope is that as you get to know these 4 impressive students, you are inspired to dream big. Remember, these are real people and this is their true story. Let's get to it. In this session, Grace makes time in between her packed schedule to update all of us on her recruiting progress. From Blackstone to Aries to Perella Weinberg, she has a ton of opportunities in front of her over the next several weeks to try and lock up her junior summer internship very early. We review how to prep for private equity interviews, as well as what to expect with the Perella first round she has in a few days. Enjoy. All right, Grace, I think it's been about, over a month, at least a couple months?
At least, I think so.
Which has been my fault. I've pushed back this session too many times, so I apologize. So yeah, I'd love to just hear an update. I know you had, last time we spoke, you had some interviews kind of around the corner, right?
So I had a lot of things, I think, like in the works then, but I'm in the middle of it right now. So
Oh, you are? Okay, good.
Yes, kind of in the thick of recruiting right now. So where to start? I had first rounds last week with 3 different groups at Blackstone, 3 different real estate groups. So their acquisitions group, asset management group, and then their real estate investment trust. They call it BREIT.
Mm-hmm.
So that's a fairly new group, but it's like a public non-traded REIT. And so I'm anxiously waiting now to hear back. I feel really good about how those went. So we will see. It's so difficult to read, especially because with Blackstone, they hire so few people. Mm-hmm. And I have no idea how many people they give first rounds to and then how many people they give super days to. Especially this would
be for junior summer, correct?
Yes. Mm-hmm. This is all for 2022.
Okay. And so you still have the city summer coming up.
Yes. And even if I don't get anything right now, I get a guaranteed return offer at Citi. So that's a really nice cushion to have.
It's just like, no matter what happens this summer, you're guaranteed.
They said that they pretty much give return offers to everyone in the sophomore program for the junior summer. So
is that just because of work from home, or is that just traditionally
that's just how they do it, because the sophomore program is so small. So it's only 30 people across all divisions of the bank. And that includes things like internal audit and risk. But within banking itself, I think there might be 5 or 6 of us sophomores. So it's not a large number. It doesn't make too much of an impact to invite those small group back.
Well, that's great. That's good to know. That takes a lot of stress out of everything.
Yes, it
does. That probably
does.
allows you to perform better in the interviews. You're like, well,
I hope so, but I still want Blackstone so badly. So I'm still very stressed about that.
Well, I mean, and it's all the real estate. You said it was 3 different real estate. Is that
yes, it's all real estate.
You specified that interested you, or?
So I'm also really interested in infrastructure. And because I did their women's program. So that's what helped me get into this accelerated process with them.
Yeah.
And when we were filling out those applications for the accelerated process, they had us rank the groups. And I actually rated infrastructure first. And I always thought that infrastructure would be a little less competitive too, but I didn't get an invite for a first round with them.
Wow.
Which surprised me because I had spoken with more people in that group, at least as a percentage of the total versus real estate. But I'm still very happy about 3 groups within real estate for first rounds.
It's such a crapshoot. It really is. So don't feel bad.
Right. There's so many factors.
It's just like they get flooded with so many great applicants from all the top schools in the world. So the fact that you're getting interviews is a great sign this early on. So, okay. So it's kind of just a wait and see. Do you feel like you said it went well, but it's kind of like if they don't invite you back soon, then you'll pretty much assume it's a no in like a week or so.
Yeah, it's difficult to tell. It's been really slow moving, especially with real estate. It's been slower than PE or some of the other groups at
Yeah, I can't believe
Blackstone.
you just started. Like you just had first rounds now.
Right. And there's some other divisions within Blackstone where they're already going to be giving out offers the end of this week. So one of my friends who also did the women's program is interviewing with their private wealth solutions group. And she's meeting with the group head as her final super day interview today. So she'll have an answer in a few days. But they've been the quickest moving group. So we'll see. I think I've been following the thread on Wall Street Oasis a lot, actually. And it sounds like when I had my first rounds, 2 of my 3 first rounds last week were on Friday. And I think that was the last day of first rounds. Mm-hmm. So I'm hoping that means that maybe this week, if I'm invited for any super days, I would be finding out soon, hopefully. So we'll see.
Fingers crossed. Fingers crossed. Yeah, well, I mean, if it doesn't work out, you still have a great firm to go to and a great program to go to. So, and if you think about it, you know, all of next year to just be, well, even you can keep recruiting in the sense of like informally and keep building the network so that next year there's just that many more opportunities for you. So is there any are there any other first rounds coming up or anything like that?
Yeah, so I got into Perella Weinberg's to their women's program, which I did. And because it's so small, they give guaranteed super days to everyone who does that. And so I have my super day with them this Friday, and that will be 4 30-minute interviews back to back. And the nice thing is they do all their recruiting through Dartmouth Partners, the recruiting firm. Mm-hmm. And so that's who I had my interview with to actually get into the women's program. I didn't interview with anyone at the firm, but they're offering us basically a free mock interview with Dartmouth Partners before our super days. So I'll be doing that on Thursday. And so I think that'll be really helpful too. Of course, the mock interview is only a 30-minute interview, but at least I'm assuming it's going to be more technical. So that'll give me.
They probably know what's being asked. So they're probably going to completely prep you. So just make sure if there's anything that you don't quite nail in that you just go back and review that night. If you have it like completely buttoned up.
Exactly.
Yeah, it's a great, Perella's a great firm. So that would be for some junior summer.
Yes. So Perella, and then I also I have a first round this afternoon with a middle market private equity firm, and that's somewhat like I originally connected there with a Fordham alum who works there. It's a pretty small firm, but he was the one who got me into that process.
What's the AUM there? You know,
I actually don't remember.
Is it like 5 investment professionals, 10, 20, you know?
I think it's around 10 to 15. I know they're growing. They started an analyst program. I think it was 2 years ago.
Oh, that's tempting.
So
tempting to take that.
I guess. So it's it's a very different option from everything else I'm doing. I cannot find the amount just looking.
Yeah, that's actually, you know, if you end up getting that, you know, I'd be curious to hear, I'd want to know before saying, yeah, go jump there is, you know, be very careful about where you go to like middle market private equity shops to make sure that they are indeed growing and they're not like in the middle of a fundraise that they say is going to close in a few months. And then like you're there for 2 years and like you haven't done a deal.
Right.
So it's just, you gotta ask them questions like how much dry powder is left in the current fund. You know, what's the size of the current fund? What's the target for the new fund? How much of it is actually committed? Like you should ask the tough questions, especially because it's a little more scary to go straight to the buy side and not have that like regimented training. Although lifestyle wise, it could be like, you know, 60 hours a week instead of 80 to 100.
Right.
So it can be like, if you actually want to have a life in your early 20s, it could be a great option for you.
Right.
And then, you know, that is something to be like, that's not an exaggeration. Like the extra 20 hours a week, and who knows, maybe this middle market shop they work really hard too, but they tend to be a little bit more, a little less face time, a little bit more, it's not about, you know, the client and the PowerPoint so much as it is about getting the analysis correct.
Right.
So that's, what's your thought on the buy side and jumping straight? Cause I know it's a little bit more of an option now.
It's definitely very tempting. I mean, I guess, like I said, Blackstone has always been my number one, and it's been that way for well over a year. But then I also, with Ares Capital Management. Yeah, that's the name.
Yeah, Ares. Yeah.
So they also started an analyst program in the last couple of years, and I applied for that as well. And they have a real estate group there, so I'm definitely interested in that. I haven't done a lot of I haven't spoken with anyone there, but they've had info sessions each Friday of this month, pretty much open to anyone over Zoom. And so I'm going to go to the one this Friday, I think. And
after your first round or your super day.
Right. Yeah. So this Friday afternoon, I'll go to that. And their applications close, I think, this weekend. So I'm thinking that after that is when they'll start giving out first round interviews. So that'll be another option to have, especially if by that point I'll hopefully have a better idea with Blackstone if I have any super days or how that's looking.
And then, part of me, I'm thinking of your background and what would be best for you. Part of me says go to the big name, get the Blackstone or get the city. Well, you'll have that internship either way.
Right.
Part of me is just go there if you get it, because it's such a solid name, and you're not coming from an Ivy League school. Just having that on your resume just looks really impressive for future things, because people are still a little bit they still lean on as much as people hate to hear this, they still lean on school and GPA and stuff like that, just because it's an easy proxy for thousands of applications. I'm talking private equity, for example. I think if you can get straight into private equity, my only concern would be, are you joining a place that has enough training where you're going to get the reps and you're not going to just be left to flounder? Because the one good thing about banking, even though the work life tends to be, can be really bad, the one good thing is it's a little more structured, tends to be, they have good training. They have, the whole staffing and all that's set up. Now, of course, work from home is a totally different story, and people have been getting swamped and quitting. And you saw the Goldman thing that came out recently, I'm sure.
Right.
That's not an exaggeration. And so you really should think, you'll probably see that a little bit this summer at Citi. And so you'll kind of get a taste for it and be like, well, I really don't want to do this, or you know what, I can handle this. And I still want it. So that's going to be, it's funny because one of the other mentees, he experienced that. He was like, this is not for me. And he's like, I'm going to go take this job where it pays me, 2/3 of what I get paid in banking, but I work half.
Oh, okay.
Right. So he's like, I'm going to go do this, and then I have time to do side projects and other things.
Right.
So, you have to think about that. And private equity, I think in terms of the work, is super interesting. But it tends to leave you a little more if you don't have a lot of if you don't have the finance background, if you don't have a lot of actual initiative, you need a little more guidance early on, like I did, because I was a liberal arts major and I was like, what are we talking about here? Then it would have been a mistake for me, I think, going straight into private equity. But for you, maybe it makes sense. You've been kind of on this track since freshman year. You're like, I know I want to do banking, or so for people like you that are a little more prepared, more knowledgeable, kind of going into the whole process, it could be good to skip that whole, even if it's only a year or year and a half of banking. It could be a really good option for you and for your health.
Right.
Seriously, it's a big deal. So yeah, I'm excited to hear. That sounds awesome. It sounds like you're in you have a lot of potential great opportunities. It's like the ideal scenario, right? You have things locked up, you're in processes. If you don't get Blackstone, whatever, 98% of other people don't get Blackstone. You're just it doesn't mean anything. And then I would just keep applying. And then I think these private equity positions, would they be internships for junior year as well?
Yes, so that's what these are all for.
That would be great, because then you'd get banking for sophomore summer. You'd get PE for junior summer. You'd get a really good flavor of the firms that you'd be working with, and then it's going to be an easier decision.
Right.
Especially since Citi, I think, works their analysts pretty hard. So.
Right. So
no, it's good. You'll get a true snapshot. It's hard to know over 8 to 10 weeks or 8 to 12 weeks, but it's at least gives you a sense, and you'll be around the analysts. You'll see what the what it's really like and stuff like that. So yeah, how can I help?
I'm not sure. I guess, one other update too is, so my current internship, the one I've been doing since December of 2019. So this time, I guess it's been about a month now. The managing director who I work under there moved firms. And so he asked me to move with him. He knows I'm going to be at Citi this summer, but I moved firms with him. So cool. I went into the office earlier this week and met all the new people. So that was really nice. But it's a slightly smaller firm in terms of number of people, but it's a really great platform. Cool. So like a great move for him. And I think it'll be good for me too, even just, the next 2 months before this summer. In terms of the work I'm doing too, because whereas before all the work I was doing was directly with my managing director for the most part, now I might be able to get a little more involved with some other work, work a little bit more with certain analysts and associates. So that's exciting too. It was very unexpected, but on
your how to deal with that for your resume. I wouldn't necessarily have like two different places. Either take the new place that he went to and just have it all under the same thing, or have it like almost like as a parentheses, like for move to blah blah blah, or something. You know what I mean? Like just so that it's you don't have like a whole new section, because then it could look like you were jumping or something, like you're jumping firms, and you don't want to give like a ton of extra space to that, especially when you're going to have Citi and who knows what else in junior summer.
Right. Because this will only be 2 months. So that's what I'm thinking is the deal experience I have listed is, of course, from the old firm. So
just leave that.
I'll have to figure that out when I
next summer
update it.
Or this summer. Coming up.
For now, like all the resume I've been submitting for all these applications was right as this was happening. So it still just says
Good.
From that day to the present, this firm.
Yeah. And I wouldn't put in a whole other firm for 2 months. It's not worth it.
Right.
And I think the good part is if you do some additional work with analysts, just try to make yourself helpful any way you can. Be like, hey, you don't want to make that pib, or you don't want to spread those comps. I can do it. And it'll just give you a little more reps in terms of doing like the actual analyst work.
Exactly.
That's good. Well, that's exciting. So you have a couple more months there, and then are you going to get a break at all before then you got finals?
Right. So I am making myself, I'm going to give myself a break in May. I realize I haven't not been working since summer of 2019. So when I have those couple of weeks after finals end, I'll make sure I'm finished with my current internship by then, before I start at Citi for the summer. So that way I'll, a few weeks of rest.
Definitely a few weeks of just doing nothing, lots of Netflix, or, maybe go to the beach or something and just do nothing, I think is the best thing you can do to clear your brain, and just don't be studying anything. It's a sophomore summer internship. You don't need to study modeling then or do anything. Just relax. So
very overwhelmed right now between work and school and recruiting, but I know it'll be worth it. Like if I get an offer out of this right now, or even if not, once it's over.
Yeah, you're still meeting people.
I'll have more certainty.
Yeah, you're still meeting people. I mean, you're talking about tying up junior summer right now in your sophomore. So it's crazy.
Exactly.
Which is awesome. But yeah, if it doesn't happen, you still have Citi to fall back on. You still have a bunch of other things, and then it doesn't stop you from kind of getting into the normal recruiting cycles too for next year. So, but yeah, it'll be fun. I think I'm excited for you. I want to hear. I'm surprised you don't know. Yeah, it's Blackstone took a lot longer, and then I guess the other processes took longer.
Yeah, it's been very drawn out with Blackstone, but cool. We shall see.
Anything I can help with? Do you want to do any mock interviews, anything like that? Do you feel like your stories are good?
I think so. Yeah, I mean, of course, the behavioral stuff, especially, I've been through because that's pretty much the same for every interview.
Yeah,
and then right, and then of course my prep for all of the Blackstone interviews last week was a little different because it's real estate focused, so all the technicals are that. It's not really banking related.
Do you have a real estate modeling course?
I'm not sure. What I was using to prep was actually my friend who interviewed with Blackstone last summer, and kind of gave me a list of all the stuff, the questions he was asked, and some different.
Are they asking you real estate specific stuff like cap rates and
Yeah, but it's very high level, and it's It's actually a lot more qualitative questions regarding real estate. So in some of the interviews, they'll say, if you have $100 or $100 million to invest, like, tell me about what you would do with it, like what kind of real estate assets, all of that. And then depending on how much specificity you provide, they might ask you for more details. And then sometimes it's more just like, tell me about like a trend you've been following or something interesting in the real estate market recently. A lot of those kinds of things, and like talking about the risk of different asset classes.
Yeah.
The most technical that it got, at least in first rounds, was kind of knowing how to get cash on cash yield given a certain interest rate and a certain cap rate, that kind of thing. Mm-hmm. So very simple math.
Yeah. Tell me about how you would even go about approaching the question of the $100 million where you invest in real estate. Are we talking about like diversifying, getting a diversified portfolio together of different assets?
No, they more so want a specific thing. So in one of my interviews, I talked about, of course, industrial is a very safe answer. So I tried to avoid that because that's also like right now, especially during COVID, that's kind of something I feel like a lot of people would go to. So in one of mine, I talked about film production facilities and how there's a huge upsurge right now in demand for content, both because of the tense competition in the streaming services space, as well as the increase in consumption of content from stay-at-home orders. So because of that, the leases are becoming longer term on these production lots. So that adds a lot of stability to cash flows, less risk. And then also the streaming services space, regardless of COVID, has, of course, there's been more and more streaming services
Paramount
popping up.
Plus, so HBO plus everything.
So it's that, and then also with those types of assets, there's a really diversified revenue stream, and that about a third of the revenue will come from the office space attached to the soundstage lot. Another third comes from the soundstage itself, and then the other third comes from different ancillary services like telecom or food services on set. So that kind of diversification can lower risk in some senses, and with ancillary services, it provides an opportunity for cost cutting depending on who your operating partner is. So
interesting.
It's a lot to talk about.
That's good. Yeah, no, I love that. When they're asking for that, are they looking for like when you're constructing $100 million portfolio? Are they asking for like one type of asset like that, or is that like what is that one part? Are you saying, hey, I'd put X% into these types of assets, and then you say like, okay, I like the reopening play, so I'm going to actually, there's a lot of distressed malls out there, so I'm going to actually do some commercial, take a riskier bet on some distressed assets. Is that the type of thing that you do, or you're saying, hey, this is where I'd put all 100 million?
The way the question is structured, it's not really about the 100 million in particular. It's more asking what would you invest in general?
What's most interesting to you right now?
Yeah, exactly. So it's really focused on a single thing. Okay. So I talked about that. And then in another one of my interviews, I talked about retail space being repurposed for industrial purposes. So a lot of closed down malls or empty mall spaces being used as distribution centers now, and how it works well because they're large and flat. They already have industrial grade power, water systems, things like that, location. So they work really well being repurposed, and then e-commerce and everything. Warehouse.
Are there any big deals that have happened like that? Like big trades that have happened, acquisitions from real estate companies that doing exactly that in the news?
No, I can't think of any specific ones on the top of my head, but I have read a lot about like smaller ones, and sometimes it's not necessarily new acquisitions, but people who are, or I guess companies that already own those spaces, just going about repurposing it.
Yeah, it's interesting. It's a crazy dynamic time right now. So it's kind of it allows you to have more interesting conversations in the interview, which is good.
Right.
You could there's lots of ideas out there. Very cool. Well, it sounds like you're on the right track. I mean, it sounds like a great answer, and I'm sure you've thought about it a lot. So anything else I can help with as you kind of lead up to this Friday? You said Perella this Friday?
Yes.
So Perella this Friday, and then potentially Aries next week or the week after. And then and then a small private equity fund. When is that one?
For a first round this afternoon.
This afternoon. Fun. So private equity. So, okay. LBOs?
So the analyst that I spoke with told me to expect really just kind of classic banking questions, and then maybe a couple of questions more private equity focused, but pretty high level in terms of, what makes a good buyout candidate, things like that.
So quick, tell me what makes a good buyout candidate right now. Do you know stable cash flows?
Yeah. And then if a good management team, of course, I mean, that's kind of a go-to for anything.
Mm-hmm.
And then also being in an industry that's not super cyclical, so it's easier to predict out cash flows, and you also want to be able to cover interest payments regularly as well.
Mm-hmm.
And just reviewing this earlier, but I'm blanking right now.
No, that's good. I think you got most of them. I think the ability to like potentially go in and make some operating improvements and increase margins, potentially
low CapEx requirements,
working capital requirements, so that such that when it is growing, it's not eating up all the growth isn't eating up all the cash. Pay down debt, and then even potentially some heavy asset potentially could be good if you could get more leverage to boost returns. But yeah, I think you got it. So yeah, what drives returns in a private equity in a buyout? What are the main drivers?
A large part of it is the purchase price, and then what the exit multiple is. And then also in there's the level of debt that you take on, like the debt equity ratio, as well as the interest rate on the debt.
Yeah, and why does more debt increase your returns typically?
Well, the higher leverage amount, the less equity that you put in up front, the more you can multiply that when you exit if you take on higher leverage.
Yeah, and then what else is good about the debt in the sense of, is there anything other benefit from the debt?
Well, I guess that in the sense that with private equity, you usually have a set or a pretty set exit timeline. So, you can really predict out how you're going to be paying off the debt and what those
I was thinking
will look like.
interest cash shield.
Okay.
Yeah.
Right.
So
okay.
Yeah. I'm just, nitpicking, but it's good. I just want you to it's this afternoon, so it's great. So you'll be ready. Yes. You know it. Trying to think what else on the PE side. They're not going to make you do a paper LBO or anything like that. Sources and usage.
At least not in the first round, it sounds like.
Okay. If you make it to like second round and they're going to make you do a paper LBO, or you can spend some time in the PE interview course because there's a ton of little paper LBOs just go. There's another file called 20-minute LBO drills. Just do like 3 or 4 of those, and you'll be like, okay. I got this.
Okay, good to know.
Just do a few of those, because if you don't, it can just take you a little bit longer than it should, and it'll be more impressive if like you just go in there, you're like done here. And none of it's that hard. It's just being comfortable doing it, having done the reps and stuff like that, setting it up. And sometimes they'll give you like a really easy prompts. They'll be like, okay, you entered this business at 5 times EBITDA. EBITDA's, 10 million. You exit same multiple in 5 years. They give you like and it grows at 10% a year. They give you really simple assumptions, and then you can just do it in Excel in like one little sheet. Oftentimes they won't even have you pay down the debt. They're just going to see if like you know how to calculate IRR.
Okay.
And multiple on invested capital, stuff like that. So, what else for PE? Yeah, what makes a good investment? Do they invest in any specific for the fund? Do they invest in any specific industries, or is it more generalist?
It's fairly generalist, but their main focuses are, I believe, like business services and industrials. And both people I've talked to at the firm, I've talked with about this, and I'm very interested in industrials. So because of the nature of the firm, like if I were to go there, then I would be able to focus a lot of my time on that if I wanted to. So that's what most of my conversations have focused on so far.
Industrial, you're thinking more
like the manufacturing as well.
Plants and stuff like that.
Mm-hmm.
Cool. That's awesome. Yeah, no, that's exciting. So I'm just trying to think of, are there deals that they've announced?
No.
Or any like what's their portfolio companies?
I've looked a little bit at that, but that's also what I'm going to be reviewing beforehand this afternoon.
Yeah, I review that just so you can kind of, if the right opportunity presents itself, you can just you can say, for example, your deal with I thought was interesting because this space is growing here, and I can see how you guys are doing that. I think it'll just show that you've done the research and done the homework on them specifically, which will hopefully set you apart. Yeah, I think it's tough because as a sophomore interviewing for private equity, it's like you have to know all this stuff. Like you haven't even had the banking yet, so it's hard because how many LBOs have you run in real life? Not many, right? If it's, like you're still doing the comps and getting the valuation underneath, getting that. And DCF, are you doing any DCF or anything like that at your current internship?
I haven't really. Most of the valuation work I've touched has been precedent transactions.
Okay.
Because very it's all very lower middle market.
Right. Okay. So yeah, I think good luck this afternoon. Anything else I can answer about PE stuff, interviews?
I don't think so.
I'm trying to think what else. So yeah, know their firm pretty well, know the deals they've done recently, especially. It'd be good if you knew a little bit about like what's happened in those specific spaces, if there's like a little niche space. Okay. So you don't want to oversell what you know, but just showing that you've read up a little bit is nice. I'd like list out the 6-7 things, whatever you look for in a good investment PE candidate, because that's very high. I'm pretty sure they're going to ask you. Right. So just being able to go boom, 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 boom easily through it will be good. And then I think that's it. You'll be in good shape.
Okay. And then I guess for this Friday with Perella Weinberg.
It's going to be technical.
Right. And they told me, so doing the women's program, we get assigned a mentor. And so she gave me a good idea of what to expect as well, that there'd be one interview with probably a more junior person where it would just be entirely technicals. And then the other ones would be like partners or other more senior people. And those would be higher level conversations, especially because I've had banking experience. She said probably be able to talk about like what you have listed on your resume and like what deals you've done or what kind of things you've worked with, right?
Like if you say, I did precedent transaction, tell me about that. Right. Tell me about what precedents, what were the multiples, like knowing that really well will be important to see if you actually did it. Or if you were just like kind of sitting along the side and not paying attention.
Right.
You know what I mean?
A lot of the prep I've been doing too has been going back to the pitch decks I've worked on at my internship, reviewing those companies and kind of.
That's perfect. For private equity recruiting, we say the same thing, to be able to talk about your deals as if they were investments. That's something else that might happen this afternoon.
Okay.
If on your resume you have some transaction experience, right?
Yes.
So they may ask you, was this a good deal or not? And so being able to actually speak to those deals as if you were an investor, and you can say, actually, no, I don't think it was a great deal. It's okay. That's not bad to say that. Or you can say, yeah, I think it was a great deal. They got this. Here's the strategy. They're doing a roll up. It's a tuck-in acquisition, or here are the synergies with this company of how they're going to grow. But don't be afraid of saying, I think they overpaid.
Okay.
Or I don't think it's a great candidate as it was a good mandate for the bank, but in terms of the actual deal for XYZ buyer, maybe you were on the sell side and you thought thought the buyer overpaid or something like that. And that's fine. But I would be ready to at least mention that and talk about the numbers.
Okay.
If you do you have like EBITDA numbers and multiples? You've done M&A transactions, or was it all capital raises?
No, it's all M&A. So the one that I can talk about in the most depth just closed a couple weeks ago and hasn't been announced publicly, but I'm familiar with multiple ranges on that. So
okay, so how much it was acquired for, what the multiple was,
right?
Of EBITDA.
Yes.
Okay, and then what was it, like 7 times, 10 times?
No, it actually came in around I think 10 or 12 times.
Okay, so
surprisingly,
how much debt did they put on it?
That I'm not sure about.
So I would know that.
I don't know if I have access to that now.
Okay. Because they may want to
But it was still really small, so it very likely could have been
no debt,
all cash, because it's a large acquirer too.
So 12x EBITDA, how much was that? 20 million. It was like a $2 million business. It was like a $20 million.
Yeah, the EBITDA was only 1.8 million, I think.
Okay, so $2 million EBITDA, 10x, it's like a $20 million transaction.
Yeah, it was, yeah.
Okay,
small.
so So yeah, you can still talk about it. I mean, I think it's interesting.
Right.
And you can say,
I essentially made the sim for it myself. So like I was super involved with it, and I know the company really well.
So yeah, being able to talk about the industry, what you like about it, the growth trajectory, you can be like, so you were helping on the sell side, basically help prepare.
Yes.
So you can be like, I actually think we got a great price. So as an investor, I wouldn't have liked to be on the other side because I wouldn't want to pay.
It was not what we were expecting.
Yeah. And you can say, I wouldn't want to pay such a high multiple for such a small asset. Something like that. That would actually show that you're not just like blindly like, yes, it's a good deal. I'm a banker. And the buy side and the PE people will actually like to hear that. Be like, but it is a fast growing company. So I could see the justification for it. But I don't think they put any leverage on it. It was a strategic that bought it, probably not a financial buyer.
Yes.
So
and a fairly large strategic too. So that's what makes me think they could have done it all cash without
exactly.
Too much
Yeah. It's different. If you're
low leverage.
If you're a private equity fund, you care about like your equity check because so you raise so much debt. If you're a strategic buyer, you already have a ton of debt, especially a large one. You already have a ton of debt. You're always raising new debt at a low cost of capital to fund acquisitions like this. Cool. Okay. I'm excited for you. So when is that? In an hour or two? Hour?
No, I have a class starting in about 20 minutes. Okay. No, about like 30 minutes. And then it's almost a 3-hour class. And then it's right after that class ends.
Oh yeah. So a little coffee right near the end of class or something.
Right.
All right. I'll let you go, get some rest before that. And then, good luck with everything. Keep me up to date, and maybe we can do another session in like a month. I'd be curious to catch up and see what.
Yes, hopefully I'll have more clarity then on everything.
Awesome. Okay, Grace. Thanks so much for taking the time. We'll talk soon.
Bye.
Okay, bye.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.